Hello everyone, welcome to my YouTube channel once again. My name is André Cardoso. For those who are here for the first time, I welcome you into this harmonic trading journey. And for those who are here not for the first time, and for those who are already familiar with my work, I also welcome you again, and I hope you enjoy my previous content. So I want to share some of the charts that I identified this week, and I want to share some of those events with you, specifically with those who are trying to understand how harmonic trading works. So I believe it makes sense to share some of those charts with some of you in order to get you synced with some of those processes. So also we have new prices for the next 2021. So I have new prices for subscribers to join my Telegram room. I'm also configuring and actually trying to understand how the privacy of a new Discord server in order to go live with some of my subscribers, at least with those who have interest to understand those processes, with live charts where I can share my screen and try to talk with my subscribers also. So we have also free educational content that I decided to put here in my website. You can also check those and some reading suggestions. Obviously, some of you are already familiar with some of those books, but just to invite you into my Telegram room for those who have interest on harmonic trading. So what I want to share with you, it's just my last update, or my last, let's call it a newsletter that I shared with all my subscribers. So I want to share some of those charts with you. And let's start with the cable. As we can see, we're still threatening that those highs from December 2019. So basically we are threatening not only the next zone of this cup and handle formation, but also next zone and the resistance for these inverted edge and shoulders. So if you go into a live chart, this is a monthly fractal resistance, that next zone that I call your attention for. So there's a new bounce from this price zone. The market has used this resistance in this fractal resistance as support, completing the bullish bat pattern at 88% Fibonacci retracement level. So this is a minor event. This is just a 1 hour time frame event. So as we can see, the 88.6 has been used as a support level, triggering that pattern, and we are already trading the golden Fibonacci retracement level, which is the second target, the second default target for the pattern. We have also this trend line resistance, so we stay on a lower time frame. Everything can happen from here, but we are now threatening this descending trend line resistance. So as you can see, the market is starting to feel that pressure. Also the 200 moving average from approaching from above, so acting as potential element of resistance. So I will not be surprised to see the cable falling, even if limited. I believe if the market decides to fall, I believe it can retest the previous structure resistance again, this minor resistance at 135.35. So I will not be surprised with that. Even a retest of that fractal, that monthly fractal, I will not be surprised with that. At this point, we need to wait for other events, at least taking into consideration the ratios and the variables presented at this point. I admit searching for shorts at these points, since we are trading this trend line resistance, it makes sense to try to search for eventual short opportunities from these highs, but again, without ignoring these weekly or kind of daily, actually, that daily chart, and we still threatening this monthly fractal resistance. Euro versus dollar. I shared also this potential bearish shark pattern and the eventual retracement back to the 50% Fibonacci retracement level, 119.76. This is actually the monthly and weekly fractal resistance, which was printed last September. So that being said, I'm expecting this. I still expect this retracement to happen, at least a retest of this monthly and weekly fractal resistance. If you go into a lower time frame, you can also see. So we are trading below this ascending trend line support, and we have also a bullish graph that I shared. I believe I shared also. Yes, I did. The 2 hours time frame, so a lower time frame event. So this is the bullish crab pattern projected right above the daily fractal, the most recent daily fractal. Note that the default target for this bearish pattern, it's positioned a few points below this monthly fractal resistance. So there's room for euro versus dollar to fall into those default targets, but we are approaching not only the daily fractal support level, but also the a bullish crab pattern. So that being said, we have this potential crab pattern at 121.22, and even on a lower time frame, if you go into a 15 minutes or even a 30 minutes time frame chart, this false breakout above these previous structure highs. So we have these previous highs here, and then a false violation of these highs, which will be confirmed as soon as the price breaks below these previous structural lows. So we need to wait for that to happen. That will confirm this as a false breakout above. So obviously we need to take into consideration this is only a small retracement, or a small, at least for now, a small correction after this major bearish momentum. So this is just pure sideways moving process. So taking that into consideration, we should not ignore a violation of these lows and the eventual one eventual shark pattern projected at the golden Fibonacci right below the support level. So basically we have a three-wave structure. If confirmed with the violation of these previous structural lows, we will search for that golden Fibonacci projected below. So that will put the price trading just a few points below that pattern that I showed you before, this major crab pattern. So that being said, let's wait for that to happen. So this is the bullish shark pattern, a minor bullish shark pattern converging, let's say, or at least will complete very close to the golden Fibonacci, the major golden Fibonacci level, the completion point for this bullish crab pattern. Let's wait for that to happen, obviously without ignoring the potential failure of those events, and with the market sinking directly into this monthly fractal. So only two things may happen. Actually, three things can happen. Obviously, a bounce and a direct recover of the 200 moving average, or at least a retest of that 200 moving average above. A sideways moving process where the market stays trading in range for undetermined periods of time. So we need to try to identify what the market will print here, or the market will sink. And if that happens, a violation of this fractal support may trigger more downside momentum for euro versus dollar. So, and because we are talking about euro versus dollar, let's jump immediately into the DXY, because also the DXY is approaching a minor shark pattern. Actually, you're trading a few points below the shark pattern completion point, the 224% Fibonacci level. So at this point, we should take into consideration the potential correction, or this kind of a small correction here after this major impulse. I will not be surprised to see the market trading even higher and completing that shark pattern above 90.85. So that is the golden, not the golden, actually the golden Fibonacci was positioned at a few points below. The 224% Fibonacci extension level, the bearish shark pattern completion point. So eventually more upside momentum for the DXY, without ignoring that we are also trading golden Fibonacci extension level. Let me try to identify this, and this was exactly the 161.8 extension from this first swing high. The market has found, so it's kind of a three waves structure where the market finds resistance at the golden Fibonacci extension level from this very first swing high. So let's call this a first swing, the retracement, and then the third wave with resistance at the golden Fibonacci extension level. So that's just to point that. So that being said, the retracement was expected. This is kind of an ABCD pattern. We can draw this something like this. 168 extension, and the market starts to fall and starts to retrace. So I was expecting, and I still expect, the retracement back to the 38% Fibonacci level. So it's the minimum expectation that I create when I see and when I identify an ABCD pattern. But of course, we have already, as you can see, we have also a three-wave structure down. So let's wait and see what will happen. So obviously, trading above the most recent highs should trigger more upside momentum for the DXY, and we should pay attention to these 90.85. So if you go into a 4 hours time frame, we can see that the market has bounced from the 89,900, which was the previous bullish crab pattern that I projected at this golden Fibonacci level. So a nice bounce here, and then the market starts to fall again, new daily fractal, and another bounce. So we're still trading that major bullish crab pattern territory or price zone, and we have this minor event on a lower time frame. We have that. Let me try to clean or to clear some of those. We have this potential bearish shark pattern projected above, again without ignoring further movement below the most recent low. So without ignoring the potential new lows or new lower lows for the DXY, but the pattern is projected there. Let's just take a look at euro versus dollar again, threatening support, and the DXY also nothing to point at these levels. Let's wait. So resuming euro versus dollar. So we have that bullish crab pattern. Australian dollar, I also shared these as a potential bullish bat pattern. We have kind of an head and shoulders, an inverted head and shoulders here, and let's try to identify that retracement. Let's put the Fibonacci retracement here. 38% Fibonacci, use it as pressure element, so the 38% Fibonacci, actually very close to the 50% Fibonacci retracement level. Aussie has felt some pressure. We are also threatening that 200 moving average. On I believe I have a weekly chart for Australian dollar. Let me just check that. And it's basically this kind of an edge and shoulder, the inverted edge and shoulder with the left shoulder here and the right shoulder there. So the pattern default projection points to the highs of this previous structure from July or from September 2017 highs. So the default target for that pattern projected. Let me try to share that chart with you. I believe I have that chart here. Yes, I do. Exactly, 81.87. So this is, at that time we were threatening the violation of the fractal, but January 2018 high. So that's where the market, that's where the inverted edge and shoulders point 81.87. So the previous structure highs. So without ignoring that, we have also lower time frame events. This was the potential bullish bat pattern projected there. So these edge and shoulders, the inverted edge and shoulders, may be used as a trigger for more upside momentum. But at this point, we can also try to identify the structure. Let me try to exact and try to see this as a potential descending channel. Similar to with the cable, also threatening the previous or the descending trend line resistance. Also Australian dollar finding some pressure as soon as the market approaches that trend line resistance above. So let's see how the market will react. We're still threatening the next zone of these inverted edge and shoulders. So let's see how the market will react from here. We expect upside momentum after that reversal behavior, so that will suggest more upside momentum for the Australian dollar. And again, that may put ourselves in a situation where we will trade in the direction of that major inverted edge and shoulders. The Kiwi also shared that one at 88.6, 71.71. So this was the bullish bat pattern. And I said once I shared this chart that actually I can show you that. I said the Kiwi is now trading the 88.6 minor field level, also forming one bullish bat pattern, a failure to find support above the previous structural lows, and the starting point of the pattern will increase the probability to trade even lower, with the next pattern projected at 70.51, the golden Fibonacci, the golden 168 extension, Fibonacci extension level right here below. So what I was saying was if the market fails to find support without violating, if the market fails to find support above these lows, the market may trade even lower. So it seems we have a support here. So we have these previous structural lows. The market has respected these lows for now, but nothing assures us that the market will use this sideways moving process as a consolidation process and more downside momentum as soon as the market violates this structure. So if the market decides to trade, actually I will stay loyal to these previous structural lows. So if the price decides to confirm and to close below those lows, we may see the Kiwi trading even lower. So if that happens, I will start to pay attention to this potential bullish crab pattern projected at 70.51. So I will pay attention to those levels if the market decides to confirm that bearish or more bearish momentum. Australian dollar versus the New Zealand, I'm a bullish on this one. I was bearish somewhere below this daily fractal. There was a pattern projected there, but at this point, and taking into consideration the most recent price behavior, we are inside this ascending channel, and we are now threatening that weekly fractal resistance from these highs. So I admit more upside momentum, and if the market decides to approach that 78.6% Fibonacci retracement level, I will pay attention to price action at this point. If that happens, I will consider this as a potential bearish cipher pattern, but for now it's too soon to project because we need to confirm a violation above these highs first, the weekly fractal. So that being said, I'm a bullish for Australian dollar versus the New Zealand, which will not that will not be granted. That's not granted because the market can sink from without confirming a violation of this weekly fractal, and if that happens, we may see a retracement for the pair. But I'm assuming that the objective is to go and to retest this monthly fractal above, a step-by-step process that as I used to say, and the next pressure level that I will pay attention for is in 109.10. So that's the 78.6% Fibonacci retracement level. So at this point, I remain my bullish bias for this one. Dollar versus CHF on a higher time frame. I shared this a couple of times already. That potential bullish shark pattern projected at 224% fee. Let's see how that's very fast, kind of a V shape here. Let's see how that market will react from here on a lower time frame. I believe, and assuming the shape at least at this point, we can wait for the potential inverted edge and shoulders at this point, but we still need the confirmation or the formation. Actually, we still need the formation of that, the right shoulder. So that being said, we need to see CHF first of all. It needs to retrace to form the right shoulder, and then if the market decides to trade above these highs, this fractal resistance, that should trigger the pattern. But again, we are trading very close to that major bullish shark pattern, the 224% Fibonacci extension level. Of course, the inverted edge and shoulders may help us to go with the market in that direction. But again, let's stay tuned with the possibility or to form the pattern below, or to wait for that inverted edge and shoulders to form and to trigger above the daily fractal. The Canadian dollar. I also shared this one a couple of times. The golden Fibonacci extension used as a support level, bullish crab pattern. The market has offered a nice reaction from here, I believe, without touching the default target. So I was expecting the 38% Fibonacci to be reached. The market has failed the 38% Fib just by a couple of points, and then new lows. So at this point, and taking into consideration the default expectation for the pattern, I will not be surprised to see the Canadian dollar squeezing into this previous monthly fractal support level again or another time, and a retest of that, and one approach to that 38% Fibonacci level. It can fail. We never know what will happen from here. At this point, nothing very specific forming below. Usually I like a V shape to identify that potential inverted edge and shoulders. eventually some of you may see this as an inverted head and shoulders, but I prefer to identify those patterns with a perfect, or at least if possible, a clear V shape between the next zone resistance and the head. So if the market fails that shape, eventually we will see another price behavior. And searching for advanced patterns and again taking into consideration the variables and the ratios here, we have kind of the golden Fibonacci extension level 129 as a bearish shark pattern. That pattern can also extend to the 224% fee, which will put the price trading a few points above these fractal levels. So that being said, I will not be surprised to see the Canadian dollar being pushed above, with patterns projected between 129 actually and 130 or 1300. So that being said, that's what we have for dollar versus Canadian. Actually, we can adjust this structure already, or at least let's see if the market will confirm that major wedge. Let's see how the market will react from here. But if the market decides to fall, it may form this descending wedge, and ultimately we will see a breakout above this wedge once completed. Okay, so let's wait and see. Pound versus the New Zealand. Actually, this is the second target. As you notice, the golden Fibonacci retracement level. This is the second target for that bullish butterfly pattern that I shared among my subscribers. So we entered this trade at this golden Fibonacci retracement level. Basically, the market, when I look into this chart, the market was already reacting from this low. So I just needed to wait. So I waited for that retracement to the golden Fibonacci level, and we entered that trade expecting more upside momentum. So as you can see, we are already trading the second target for the pattern, and at this point I also suggest to start to trail the position or to close your positions and call it a trade and move forward. So that's what it is. This is the pound versus the New Zealand, the bullish butterfly pattern printed at 127% Fibonacci extension. It's crucial to identify that 78.6% Fibonacci retracement in order to identify later that potential reversal price zone. So, and as you can see, the market reacting very well from that after completing that bullish butterfly. So resuming the Canadian dollar, so let's see if the market will develop into this major or kind of a higher degree descending wedge, and what will happen from there. If then the same may happen for the Norwegian krone. Obviously different price behavior, far away from the trendline resistance. If the objective is to retest these highs and to confirm that as a descending wedge, we will need to wait for that to happen. And as projected before, we never know if the pattern will be formed and will complete or not. But if that happens, and assuming the bearish momentum that we are seeing here, I will not be surprised to see more downside for the Norwegian krone. And if that happens, I will pay attention to that major pattern. At this point, as we can see, the market has found some support at the 38% fib after this very first swing high. So we have already a retracement. to the 38% fib, which usually may offer us a sign of strong momentum coming above these previous structure highs. So if the market decides to trade above these highs, we expect a strong bullish, more bullish momentum and a strong bullish momentum above. If that happens, we will pay attention to this trend line resistance approaching from above, and also to this kind of a higher degree. Let me try to show you this on a higher time frame. So we have also a trend line resistance covering those highs between the monthly fractal and the weekly fractal resistance. So we have this trend line resistance approaching from above. So converging with this descending wedge, or this eventual descending wedge trend line resistance, we may point into this, I don't know, that let's point this confluence bit at 877.43, so something like that. I will not be surprised to see that happening without forming the crab pattern below. So, but usually I do expect this type of reaction when the pattern gets formed and not before. So obviously it can fail, the market will not complete the pattern and will react even though, so we need to pay attention to that. If that happens, as I said before, I will pay attention to this trend line resistance as potential pressure price zone for the Norwegian krone. And I believe we need to see that happening on a higher time frame. Mexican peso also threatening a violation of this trend line resistance, this trend line covering these previous structure highs. The market has felt some pressure without completing this major bullish bat pattern as projected before, just a couple of times already. And again, I will not be surprised to see that the price falling below these most recent daily fractal supports at 19,600 and then 35.35, so completing the bullish bat pattern, 88.6 from these previous structural lows to the monthly fractal resistance. So this is a retracement between these lows and these most recent, or the previous structure highs, in fact. So nice reaction from the 78.6, but not enough, and not from the price zone that I'm searching for. So I still wait. I still prefer to wait for that 88.6 to be achieved before starting to search for patterns to go long with the Mexican peso. Dollar versus the Japanese yen. It can change. It can be. We can face this as a potential ascending wedge or a pennant eventually, or even an ascending channel. That will depend where the market will find some support. But at least for now, we have the market respecting this kind of a trend line resistance. And we have this bearish shark pattern, or the golden Fibonacci extension, projected at 104.70. So that means said, bearish shark pattern on hold at this golden Fibonacci previous structure highs. And if that fails, if the market decides to fail to find resistance around this price zone, we may see a retest of that weekly fractal with another shark pattern, this one projected at 224% fib. And as I said before multiple times, do not ignore the potential for the price to react from those levels. So it's not the first time the market will find resistance at the golden Fibonacci. It will print you a retracement and then 224% Fibonacci completing the bearish shark there, and then again a new retracement. So that's trade the patterns and don't trade false expectations. The default expectation for the pattern to work is to get formed at the golden fib and then to retrace 50% to the 50% Fibonacci retracement level. So that being said, we will wait for that to happen. We will wait for a 50% Fibonacci retracement if the market decides to form that pattern. And if the price decides to print the pattern at 224% Fib, which makes sense to retest this fractal resistance, the same will apply. We will expect the market to retrace back to the 50% Fib, which will offer you a much profitable and nice and friendly risk-reward approach to trade for sure, instead of trying to engage the market from this golden Fibonacci level. Both may work and both may fail. So the first pressure level, golden Fibonacci, previous structure highs, 104.70, few points above the golden Fibonacci retracement level, the 61.8% Fibonacci retracement level. So that being said, let's pay attention to those price zones. Euro versus yen, I shared this one also with my subscribers. We shorted this alt bat pattern at 113% Fib. So as we can see, we are also trading the golden Fibonacci retracement level at 61.8% Fibonacci retracement level. Second target for the pattern. At this point, as I always suggest, we have two options. One of them is to close the trade and call it a trade. Close your positions and call it a trade, or start to trail your position. Close another portion of your initial position size or the remainings from the first target, because we had the first target at the 38% Fib. So at the 38% Fibonacci retracement level, as soon as the price touches that 38% Fib, we close half of our initial position size. And then if the market decides to sink and decides to let's say to maximize our profits, we need to take some decisions from this golden Fibonacci retracement level, the second target for the pattern. We close a portion of our remainings and we keep holding these shorts with a trailing stop, or we close the position and call it a trade. So we just, in this case, just to say that we're still holding this trade, or at least I believe some of my subscribers still holding that position. We have this major trend line support approaching from below. Let's see how the market will react once it approaches the daily fractal. This is an horizontal support level converging with this potential ascending trend line support. So let's see how the market will react there. But let's not ignore this expanding formation, or this expanding structure, and the eventual fall into this trend line, this eventual trend line support. This will point into the weekly fractal. This may point into the weekly fractal resistance, so which may act as a support. So this was a resistance printed last November, actually, exactly last November. So that may act as a support if the price decides to approach those levels. So, but at this point we have nothing to say. We just need to hold our shorts and to try to trail it, and try to maximize profits during that process. Pound versus the Japanese yen. I also shared this one as a potential with more upside momentum, with potential for more upside momentum. That's the way. But we are threatening not only the daily fractal, but also the 88.6% Fibonacci retracement level. So this is a natural pressure Fibonacci level. I will not ignore the eventual retracement, eventually a reinforcement of this ascending trend line support. So at this point, I have no interest on this chart, on this pair at this point. I will start to pay attention if the market decides to approach that monthly fractal. So that may offer me, that may print as the bearish crab pattern at 141.68. So a few points above that monthly fractal. So if that happens, I will start to pay attention. For now, nothing in specific, unless if the price decides again to reinforce this trend line support, I will observe and I will try to identify other events if that happen. Australian dollar versus the Japanese yen, we have a lower time frame, let's call it a 30 minutes time frame, inverted edge and shoulders. We have default projections for that pattern at 200% Fibonacci extension level, so just a few points above the current or the most recent highs. So I will not be surprised to see a retest of this previous structure. But on a higher time frame, we still trading that bearish shark pattern territory. So that being said, I will not be surprised to see at some point and a step-by-step process towards the 38% fib, or eventually even further with the default target for the pattern suggesting a visit to or a retest of this weekly fractal resistance. So of course it can fail, the market can keep trading even higher, so we're still trading above this trend line or this potential trend line support. So, but the pattern, it's suggesting a retracement. It suggests a retracement, and we should not ignore that possibility. It's a bearish shark pattern, so it's a natural process to expect that kind of a retracement. So New Zealand versus the Japanese yen, I shared also this one kind of a daily chart, I believe, or a weekly chart. Actually, it's a daily chart. We can see this as a daily chart. The inverted edge and shoulders still pointing to these previous structure highs, very similar to the Australian dollar. Actually, the Australian dollar versus not the Australian dollar, the New Zealand, exactly, versus the dollar. We have also New Zealand versus the Japanese yen, now trading above this next zone, and we have default targets for the pattern also pointing these previous structure highs, 83.67. That's where the pattern, that's the default projections for the inverted edge and shoulders. On a lower time frame event, on a 4 hours time frame, we're still trading inside this ascending channel. The market has felt found some resistance, some pressure here. So, and I will not be surprised with a retracement from this zone. We have a eventual bullish cipher pattern at 73.33, also suggesting a visit or a retest of these monthly fractals. So I will not be surprised to see that bullish cipher being formed and then a bounce again from these levels. But it's too soon to start to project. We need to see the price approaching this daily fractal first of all, in order to start to identify and to prepare that potential bullish cipher pattern. Until there, we need to wait for that to happen. We need to wait for the price to trade below this daily fractal, but well, at least for now, that's what the ratios may suggest. The 127% Fibonacci extension from this very first swing high, the retracement, the 127%, 141, and then if the market decides to retrace back to the 73.33, the 78.6, that will complete the sequence, that will complete the bullish cipher pattern. The Canadian dollar versus the Japanese yen, I also shared this with a few of my subscribers. I believe some of them asking about the specific CAD versus the Japanese yen. I shared that one as a potential bearish bat pattern. Actually, I shared all those patterns. We shorted these bearish shark pattern. Then the market decides to recover. Obviously, at this point, we are already trading the default target. So at this point, we should break even your trade. As soon as the market starts to recover, we should exit your positions. As we can see, the market has found the golden Fibonacci as support again. So, and that's should force you to not only to break even your trade, but or to close your trade, or to start to trail it with your stops at profit. So that being said, even if the market decides to bounce from these lows, we have our profits, and the market then decides to retest the previous structure highs. So at this point, and again taking into consideration the ratios and the variables between those swings, we have this bearish bat pattern printed at 81.89, the 88.6. But this may act also as a potential or as an eventual cup and handle. So basically we have the handle formed already. So we can expect, if the market decides to trade above this previous structure resistance, we can expect more upside momentum, and the default targets for that pattern should put the price trading. Let's try to measure that. Not something that I measured already. Let me try to increase my time frame here. Let's go into a 4 hours time frame. Let's measure the close prices of that behavior and search for the 200% Fibonacci extension level. So that cup and handle may put the price trading the 83.64. So that's a nice run if the price confirms the pattern. As soon as the price validates the pattern, we can create that expectation. Until there, nothing to project, nothing granted. We need to wait for the pattern to be printed or to be validated. Now, euro versus the pound. I shared also today or yesterday, I shared this as a potential bullish bat pattern at 88.6. So it's important to stay above these lows, above the starting point of the pattern. So it's important to respect that starting point of the bullish bat pattern. We should not ignore, of course, the 113% Fibonacci extension level as a potential alt bat pattern, as a potential false breakout below. So a false breakout below these previous structural lows, and I need a ratio, I need a Fibonacci level to identify my limits for that to happen, for a potential false breakout. So that being said, I use the 113% Fibonacci extension from this very last swing high, of course. The one that I use to identify the retracement, I use to identify the extension to the 113% fib. I will try to draw that again, so I can put a retracement between these highs and these lows, actually, and these previous structure highs, and search for the 88% Fibonacci retracement level as a completion point for the bullish bat pattern, the default 88.6 bullish bat pattern. But I always take into consideration the potential false breakout below the previous structural lows, the 113% fib. So that being said, when I trade the bullish bat pattern or the bullish or the bearish bat pattern, I'm always forced to use kind of a one-to-one risk reward, where I will enter the market and I will expect something like, in this situation, something like 52 points as my target, or my default first target, and then I can use that same ratio, 52 points, and try to identify my limits. So that being said, I never enter the market to lose more than what I expect to win, or to win in a specific trade. So that being said, I'm forced to use a one-to-one risk reward. That trade will be maximized if the price decides to achieve my second target, and of course even more if the price decides to retest the previous structure highs. But trading the Fibonacci levels and trading the default expectations for the pattern, I will expect a bounce without confirming or without breaking these previous structural lows, expecting in this situation 51 points above my entry point or my entry level. So as you can see, I'm already suffering at negative at this point, but inside my criteria, so nothing to fear. If the market decides to fall, it's just another one that will fail, the same way that I show you already a few other that have worked very well. So that being said, one thing will cover the others. We just need to assure that we never enter the market to lose more than what we expect to win. And that being said, that will force you to use a maximum of one-to-one risk-reward approach every time you enter the market. Obviously, you should try to minimize your losses once possible, but this is not a situation where I will search for that possibility. So that being said, in this situation, I'm forced to use a one-to-one risk-reward because I'm aware that the market can squeeze below these previous structural lows just to hunt those stops positioned right below, and I will wait for the 113% Fibonacci to put some pressure there. If that happens, look what will happen using a one-to-one risk reward, and that's one of the reasons why I tend to say and to suggest not to use a one-to-one risk reward, because if you use a one-to-one risk reward and if the price decides to trade against you and then bounces, look what will happen to our reward. If the market decides to bounce from the 113% fib instead of a bounce from the 88.6, this is my potential reward. So it will jump from a 51 points initial expectation into a 30 points or 28 points. So in this situation, I will lose more than what the market will offer me for sure. So if the market decides to search for the 38% fib, it will offer me only 28 points. I will take those 28 points, of course. I will respect my criteria and my limits. I will take that offer, but just to point that if we use a one-to-one risk reward every time without trying to minimize our losses during this process, identifying those harmonic patterns, if we use a one-to-one risk reward and if the market decides to trade against us, look what will happen to our reward and to our risk reward. So that being said, we should always search for opportunities where we are capable or where it's possible to minimize our losses considering the reward. So we always search for at least 1-2 or 1-3 or 1-4 risk reward approach if possible. This is not one of the situations where we try to search for that to happen, as I said before, because we have that potential false breakout and the 113% Fibonacci projected right below the previous structural lows, of course. So that being said, just to point out that bullish bat pattern, and we're still waiting for that bounce. Euro versus Australian dollar. I saw that yesterday as a potential descending wedge. These red lines here, this trend line support and this trend line resistance. We saw the violation of this trend line or this structured trend line resistance with one. It's kind of an outside return. We call it an outside return because the market breaks above the trend line and then it recovers inside the structure again. So it's kind of an outside return price behavior. So that being said, we have also one potential shark pattern projected right below the previous structure support level. We need to go into a lower time frame, even into a 15 minutes or a 30 minutes time frame chart. So, and that being said, we have this, it's kind of actually it's not a shark pattern because the market, we can face it as a shark pattern because we have closes above the previous ones. We can use an extension to search for that potential pressure zone here. Actually, let me try to, actually is exactly an extension of this very last swing high right there. But we can also face this. I was searching for the potential extension of all this swing to the golden fib. So, but I've noticed that the price has started to find some pressure there. I'm trying to pick my extension tool here. So when I saw the price approaching this support level, I started to project that that golden Fibonacci here around let's say around 155 56 51. So, and I started to see this as a potential crab pattern, but now I started to see this pressure at the previous structural lows. So I will not be surprised to see the market reacting again from here. But if the market decides to fall and to break below, I will pay attention to this major golden Fibonacci extension level 56.51. Again, a bullish crab pattern without ignoring the potential bounce, even if limited. Don't ignore that possibility, but I prefer to wait for a pattern to form, and in this case, in this situation, I prefer to wait for that bullish crab pattern. It's a very similar pattern, very similar to the one printed above, the golden Fibonacci being used as a support level and producing a nice bounce. So we can expect that to happen if the market decides to fall. This is of course a lower time frame event. You can even go into a 15 minutes time frame chart. If the market decides to fall and to approach these levels, we should pay attention to that potential crab pattern. Euro versus the New Zealand, increasing our time frame here. So I shared also these, actually a lower 2 hours time frame. I shared this bullish crab pattern, another one, the golden Fibonacci extension level, acting as a support, and eventual inverted edge and shoulders. So at this point, I still bullish with Euro versus the New Zealand. I shared these bullish shark pattern, bullish crab pattern completion point. So we're still trading and we still expect the default target to be reached for that pattern 170.36, the 38% fib. We have the 200% Fibonacci extension as a default projection for that inverted edge and shoulders a few points above, and we have the golden Fibonacci extension, an extension of this very last swing low, the one forming the head or the eventual head, completion point for a bearish shark pattern. As I said before, the shark pattern can be formed also at 224% Fibonacci level, which will put the price trading this previous structure resistance, but the first pressure level will be at 170.48, bullish shark or bearish shark pattern converging with the default target for the bullish crab pattern printed below. So that's what I think will happen for Euro versus the New Zealand. Pound versus the Australian dollar, it has completed this bullish crab pattern below, nice bounce. I was expecting the formation of another shark pattern at the golden Fibonacci 173.81. It didn't happen until now, unless it can happen. It's still a possibility to form that pattern, but I need to see the price reacting fast from here. If the price decides to extend this consolidation process, eventually it will start to fade. With the possibility to form the pattern will start to fade. So if the price decides to fall immediately from these previous structural highs, or actually from this 200 moving average, 38% Fibonacci retracement also, I believe, actually nailing the 38% Fibonacci from these lows. But if the price decides to fall into these lows, that will complete the bullish shark pattern, and another bounce will be should be expected. So, and taking into consideration the price action at this point, we may see the formation of one and later inverted edge and shoulders. So we need to see how the market will react. But first of all, it's too soon to project that pattern, of course. But assuming the eventual fall from this 200 moving average, which is not granted, I'm not saying it will happen. Actually, the market is threatening the recovery of that 200 moving average, and also the most recent trend line resistance. If the market decides to trade above, it should trigger more upside momentum. But assuming the eventual fall from this zone and the eventual completion point of this bullish shark pattern, we may see then later, of course, and expecting the reaction or the default reaction for the bullish pattern, then later we may start to project these eventual inverted edge and shoulders as a reversal price behavior, which may offer more upside momentum for the pound versus the Australian dollar. I shared already this one with you, the pound versus the New Zealand, already trading the default target. I shared also the Dixie with that pattern projected above. Let's go into the commodities with gold, silver, and oil. So I shared these on the socials. I shared these on Twitter, I believe, last week, calling people attention to this golden Fibonacci and this completion point of this bearish bat pattern at 88.6. So if you are following me on Twitter, I believe you are familiar with this bearish bat pattern. As you can see, the market has already achieved the default second target for the bearish bat pattern. So at this point, we should close our position, or it should be trailing this one already. But at this point, actually, I have small longs. I have entered in a small position at the golden fib, and I entered with a small position because I have no clear pattern to trade. I just have the golden Fibonacci and oversold conditions, so I pushed a small trade from the golden fib. So I'm still waiting for a major bounce for the gold. Let's see if that happens or not. If it can fail, we are at this point threatening on a 4 hours time frame chart. We are threatening the recovery of the 200 moving average. So if the price remains above it, I believe it should trigger more upside momentum. Silver, I was expecting the formation of a bearish bat pattern, which never happens. The market has decided to find resistance a few points below the 78.6, not enough to produce to print the pattern. So, and very similar as gold, also bouncing from in this case from the 50% Fibonacci retracement level, didn't achieve the golden Fibonacci level, silver, but it has found some pressure and some support. Actually, we have a daily fractal over there, and we have the most recent fractal support at 24.34. So we're still threatening that. We're still trading above that 200 moving average. So for the bulls, I believe it will be good for the bulls. Now, almost finishing here for today, we have these WTI. So this is crude oil, and well, I projected this one before. I still expect some reaction around this price zone, 51.71. So this is a 224% Fibonacci extension level. So I will not be surprised to see a retracement from this price zone. I'm not saying the market will sink into these, it will print us this deeper retracement as a default expectation for the bearish shark pattern. I will not say that will happen. We need to wait. Only the market will confirm that over time, but we are trading that bearish shark pattern completion point, so I'm expecting some reaction against the most recent momentum. So I'm expecting a retracement for crude oil, which can fail, and taking into consideration the most recent environment and actually the bullish trend established. I will not be surprised to see more upside momentum, but we are trading that the range for that inside the range for that bearish shark pattern. Similar SPX 500, I shared also that bearish crab pattern completion point, and I shared this as an opportunity to go short. So basically, we're still trading inside this range between the most recent fractal resistance and fractal support levels. The completion point, it was projected at 38.23, the golden Fibonacci level, and we are actually threatening or reinforcing this kind of a trend line resistance. So this is a trend line resistance. This is a parallel channel between these lows and these and the previous structure highs, so projected here. So basically we see the market facing this trend line resistance over there, so I will not be surprised to see that that trend line acting as major resistance and giving sequence to these to the bearish crab pattern printed above. So I'm expecting we have shorts for SPX 500. The DAX, German DAX may follow the equities in general. So basically, if the SPX 500 starts to fall aggressively, I believe the DXY may also follow with similar market behavior. But at this point, and because we have patterns with default targets projected at 1479, so that's a 200% Fibonacci extension level, and it's a default target for kind of an edge and shoulders. These lows use it as a right shoulder, so I will not be surprised to see in a mid-term, let's call it in a mid-term perspective, the German DAX trading even higher. It can happen the same with SPX 500. The market can fail that expected retracement, which will increase obviously the probability to trade even higher. If that happens, obviously the DAX should also follow and will target the default projections. So some of you don't trade the Bund and the bonds, but it may be useful in terms of directions and in terms of correlations. So basically, I shared this bearish crab pattern at the golden Fibonacci extension level, and the market has already achieved the default target at 176.80. So basically the 38% Fibonacci retracement being achieved or being reached as a default target for the pattern. We have a second target as always at 175.60. So this is the second target for the bearish crab pattern for the Bund. The 10 years, much more interesting at this point. Let me delete this one. And let me show you these on a lower time frame. So once I saw the potential technical double bottom, I draw these as a potential inverted cup and handle. So we needed the handle. The market didn't form the handle at that point when I started to project this as a cup and handle. I projected these, identified this as a technical double bottom, validated above this previous structure high, so we have a broken neck, and I shared also this potential bullish 2618. So the market has found some resistance above a broken neck, then it starts to retrace, and then I shared this as a bullish 2618 trade setup, nothing more than a double bottom followed by the 618% Fibonacci retracement. So from there we expect the market to form a symmetrical or symmetrical ABCD pattern or symmetrical behavior, and as we can see, the market has nailed that symmetry, forming the ABCD pattern, or kind of an AB equals to CD waves. So after that pattern being formed, we expect, of course, the retracement, and as we can see, the market wasn't capable to trade above these. At this point, it's the weekly fractal resistance respecting that level, forcing the price to fall. Then when we were trading above this trend line, I saw the potential violation of that structure, and I shared this chart when the price starts to approach this trend line with potential shorts below that trend line, that ascending trend line support. So at this point we are also approaching the default target for the cup and handle, the inverted cup and handle. We have projections for that pattern at 136.01, and we are at this point reinforcing, let's say, or retesting, or kind of, we have reached this trend line or this potential trend line support. This is a descending trend line, and the market is already approaching that potential pressure price zone, which may be reinforced by this trend line. So let's see how the market will react from here, but at this point nothing very specific. So I also I follow the cryptocurrency markets, specifically Bitcoin and Ethereum. At this point we have no clear evidence or no clear patterns forming at this point. This is a 1 hour time frame. I can try to see this as a potential left shoulder and the right shoulder, and this being the head, but tricky pattern. And if that happens, we need to wait for a breakout of the daily fractal. So that daily fractal will be used as a next zone, as an horizontal support. And I believe if the market decides to break below that daily fractal, it should trigger more downside for Bitcoin, which should be followed by Ethereum in general. So if Bitcoin starts to fall, also Ethereum should follow the same momentum. But at the same time that I don't have a clear event for Bitcoin, even on a higher time frame, because the market squeezed high, rally aggressively, and we have no clear patterns at this point. Ethereum, it's a different story. So because we have a retest of the previous structure highs, we have the 88.6 actually acting as a potential resistance, and once the price approaches that level, it starts to fall. So we have lows above the 38% Fib, just a few points above the 38% Fibonacci retracement level. So we should not ignore these as a potential, I will call it this kind of a weekly eventual cup and handle. So we are now forming the handle, and well, the pattern will trigger only above the previous structure high. So we need to see the price validating the pattern as always. But this is what I can see for Ethereum, which will put the price trading much higher, which may put the price trading much higher. And if that happens, I will dare to say for the cryptos in general, but specifically for Bitcoin and Ethereum, if that pattern triggers, that may put Ethereum trading at 26.65. So that's basically a very round number, 200% Fibonacci extension, default projection for the cup and handle formation for Ethereum. That's how I finished today my insights with you, and I hope you enjoyed this video. And if you have any doubts, any questions, and if you need to clarify something or something with me regarding those advanced patterns or any other issue you have regarding the market, you can always try to contact me on with my email. You can jump into on my website and try to contact me from there also. So that being said, I hope you enjoyed this presentation or this video. And well, that's all for today. I will try to update some of those charts during the week. Stay tuned, and don't forget, you can always try to subscribe my service, and we will try to talk regarding those advanced pattern formations that I used to identify inside the market. So that's all for today. I hope you enjoy. Stay well. All the best for you and for the family. Have a nice week ahead.